So as you know, and you kind of are starting to look out, a heat map is what book map is. It takes the L2 or the DOM and it makes it a visual representation. Green dots are market orders being applied to the lines, which are the limit order book, right? The advantages of the heat map, most specifically that I like, is the historical information. What makes L2, and it's the reason I use this for everything for the most part, is what makes the level 2 difficult when you're reading the order book through DOS or the level 2 is the numbers don't stay there, right? As certain transactions occur, you have to kind of keep it. Actually used to keep a notepad and I would actually look at the order book and I would actually write down orders here, 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 and here. That way I could look back in time and see that. And that took just so I would remember where the large orders were before if they got pulled off the order book, right? So in this instance, right, and exactly, Pivotal, you had to keep scrolling up and down through the order book, constantly looking at them over and over again. Bookmap just makes that a little bit easier. I'm going to leave off of this analogy a little bit, but just remember there's an analogy I use that's called jigging. When market makers are trying to entice your participation, they're constantly moving just a little bit too low and pulling up a little bit too low and pulling up. It's not about them, it's about you. They're actually trying to get the retailers to come in and coming back in and getting stronger. And you can see here how this order book the orders actually pulled up. You can actually see that the buyers are coming closer to the price. Whenever you see price size coming to price, this is a really big indication that DMMs are starting to kind of panic fill a little bit and are starting to chase price. If that starts to happen, reversals can be very, very aggressive off of that. So here's an actual chart off of a fishing website just to kind of show you how funny that is. Whenever I see this and I visualize it, now I look at this, right, and it looks like this to me. Right? I mean, this is our buying range, right? Buying range, this is our selling range, and then we break out, right, over and over and over again until we don't. All right, it's the same thing. This is a participation-based concept, right? And when you're trying to get participants to come in, sometimes you got to jig them, right? So here's another demonstration of the order book and what the order book looks like. Got a little bull here just to remind you it's bullish. This was actually coin on a day that coin went into play. This was July 2023. But you could see how obviously bullish and strong this order book was to the top side, combined with a lot of market buying activity. It made it very easy to advance the stock that day. You can see that our dots are showing us our market activity as we try and sell through levels, right? So you can actually see the example of selling, right? As our large dots come through, we actually sell through this large limit buy. Right. We talk a little bit about volume delta or cumulative volume delta. This is our buys plus our sells. So when you see a red dot or a green dot, right? Hey, Gail, when you see a red dot or a green dot, what you're actually seeing is the how many market sells there were versus market buys. So if the dot's red, it doesn't mean there was no buying. It just means that there was more selling than buying, right? So the opposite of that would be total volume. So you can actually see here that the volume was actually split between buyers, but there was more sellers than buyers. So in this instance, right, for me, this would just be a red dot. This kind of goes into the order book concept. Remember what I said about volume versus the order book limit? This works very much the same way as, like, you know, how an airplane wing works. You know, with an airplane wing, it actually, you get lift because the wind speed is moving differently over the top and the bottom, and this is what creates the lift, right? Well, this actually works the same way in the market. When you have more orders hitting the ask, right, and you have orders to the top side and limit, this creates lift for the market. So it's not even an if can, it's a will. If you have a strongly tiered order book to the top side and you see market orders coming in as buys, you're going to move up against those if that buy volume is substantial. So that really helps you out. I wanted to point this out a little bit too for everybody, especially for those who play the open. News really affects the order book a lot, and I want to show you kind of what I mean by that. So when I talk about market makers and value, one of the first things that a lot of people think is that the market makers have specific prices that they're moving to, like at just like in this instance 45.30, 45.35, 45.40, 45.55. But what they don't realize is market makers actually play an incredibly wide value range, and I want you to see that here. So this is before a news event. Notice on the book here, see how you see these sweeping lines coming across the book? This is actually market makers taking their orders off the book, right? Because it's, and this is what I mean when I say market makers aren't just at a point, right? They actually comprise every single price level, right? Every single tick from top to bottom it has orders that are placed by this market maker. And you know that because when they take their orders off, they come off, right? And then look what happens when the market comes back in and they buy. You can see how the orders actually start to tier back in as the computer or the algorithm starts putting orders back out onto the book. This is what we mean by price discovery, right? When you're trading the open, part of the reason why the open is very difficult is because you have an extreme amount of volume, and that extreme amount of volume gets poured into a very empty book, right? Which basically creates a low float situation, right? You have a lot of shares, you have a lot of volume, but not a lot of available shares or contracts, right? So you literally get for that opening, that ORB or whatever, it's basically a low float trade, right? Because although you're playing a larger value ticker or a higher float ticker, you're specifically taking an advantage of a moment when that ticker is in low float mode, right? So when this is why it is better to actually wait a few minutes and allow the order book to develop and allow price discovery to occur. Then you can see there's a top of a range here, there's a bottom of a range here, and what we can do is wait for it to get to the edge of it. We can play the fade of it down to here, or if it gets down to here, we can play it to squeeze here, or if we're in the middle, we can play one direction or the other, right? But this one's pretty balanced, so we wouldn't do that. We'd wait for it to get to an edge. Right. So I have to play a momentum strategy that takes advantage of it already being in motion. Right. So you're gonna have to use EMAs or something like that. But you can't use a moving average when a stock's not moving. Right. When a stock's in an opening range and it's chopping, that stock is not moving. Right. It's just finding price. EMAs don't really apply yet. Right, so that's why this gets very, very difficult to manage some of these. But by the time the 5-minute ORB sets in, it starts being a little bit more relevant. But I assure you, I really view these as being an incredibly advanced technique, for sure. And agreed, Dwayne, you also will need to have a very high risk tolerance because you're going to risk a lot more money to make more money. And this is what I talked about before with the where. Right, part of having the where and the precision of utilizing a where the way that I utilize it is that you have a very good RVR ratio, right? You're going to risk $100 and then you're going to hopefully make $400, $500, $600 off of that risk. When you're trading momentum strategies, you are often running more of what I would consider to be either a 1-to-1 ratio, at best a 2-to-1 ratio, but often an inverted ratio. And this is where you have to be very, very careful with this kind of trading strategy, especially if you're not using hard stops, which can be incredibly difficult to use with these kind of strategies. Most momentum traders of this nature will not use stops because they're not playing levels. So why would they stop there, right? You're playing momentum. The only way you can stop is if you're wrong, which also makes it very difficult if you're someone who doesn't like being wrong. You will hold prices, you will hold positions too long and lose too much money very, very quickly, right? You have to be very, very risk tolerant and you have to have incredible self-control in order to implement some of these strategies. So for me, that's the reason I shied away from them quite a bit. Now, how news affects the book, I wanted to show you here. I have this post here of a call that I made. This is also from the Market Thorcast. You can see here on September 7th, that I called. Initial jobless claims came out a bit mixed for me, but shows interest rates are cooling. Did manage this move us into a perfect area to buy. S3 on the monthly for both so far. Buyers are slow to step in. So on the 7th, I wrote this. If you go to hashtag Market Thorcast and look at the 8th, on the 8th you will see I see something different for the first time in a month. I see sell orders to the top side. It looks like our bulls are coming in, and that was on this day, right? Every single day at 9 o'clock Eastern on my Twitter or my X, whatever, I do a Market Thorcast. So I just post basically like a weatherman's report of what I'm seeing on the ES and the NQ and where I think we're going to end up by the end of the day, kind of a concept. So another bullish book, helping to get better entries and better exits. What I mean for that is my buddy K Money was actually in the room today, Kaiser. Put up some really impressive trades. One of the things that was the most impressive about his trades was a Market Thorcast, right? One of the most impressive part of his trades was that his exits were right at the bottom of the candles and his entries were right at the tops, and he was shorting, right? The reason why is because Kaiser's really good at reading the order book. So if those partials are happening, you'll notice that those partials are going to be happening here, here, and here, right, as we're moving. So if you're targeting these areas and you're shooting for partials in front of these large orders, you'll find that you're getting filled right near the tops of candles because we're going to create those top of candles right off the orders, right? Book flip. Want to talk about the book flip. So remember I said bearish or bullish order book. One of the ways we know reversals are imminent or are coming is that the book flips. So you can see here at this point, right, our book is very, very strong, right? And we're actually buying up that limit. But as we're buying up, notice what's happening to the downside, right? We actually have lots of orders that are starting to come into the downside, and it is beginning to build a limit order book to the downside, right? So although we're buying up into a very large seller, right? And we're starting to get lots of limit orders to buy to the downside. Right, so this is a really kind of an indication that we're starting to struggle a bit because our buyers are no longer putting sell orders up here. Rather, we're starting to get new buy orders down here. This is creating a buyer's market or a bearish market. And you can see once here, look what we have here. Iceberg, right? We went up and we bought into this heavy level and then tried to push away and then stalled, and we found out we had a lot more sellers there than we thought we did, right? That whoever this institutional seller was at 285 overwhelmed the price there, right? And we pulled away and we already were anticipating, yeah, this could either be new buy limits, right? Or this could be short sellers starting to short and put out profit targets. Either way. Now, once we start selling down this limit ladder, notice this, which is very, very interesting. As we start to sell down the ladder, look what happens on the back side of it. Nothing, right? Nothing happens on the backside. This is a liquidation event, right? As we're starting to sell, we're selling down this limit order and no one is buying, right? We're getting no new profit targets to the top side. This has become a very bearish ticker. Right, so we ended up starting here and chopping ever so slightly to the top side, but once we failed, we waterfalled very quickly. And this is a perfect example of where if you were buying, and this ends up being a selling range, right, and you're trying to buy long into this, you get flushed out and you're confused. You missed the big move. What did I miss? What you missed was this was a short. It was just a matter of time. So here's an example of Tesla. Showed a really aggressive order book. You can see here an example of sellers coming in a panic, chasing after the price. Notice how that pushed us down on this day for the ES. You can see here how we sold down to an order book and we bounced off the large order and then started buying, right? We were looking for a place to buy. Now we see buying, right? This is the perfect spot that you go long. Look, we got down, hit the order, started buying right there. Right, this is the where the when, right? The where we're looking for buying. We want to see the buying come in here. You can see here, this is an AMD trade I took a little while ago. right? You can see here we squeezed up into R3 here, and I took a short at R3 and played the move back towards it. This is what the order book looked like at the time. We had orders coming out to the downside, looked like the book was starting to flip. We were exhausting, trying to move towards this large order at 16050 or spot 50. And you can see here we sold off afterwards. And that's it. Hello, Market Alchemists. We hope you enjoyed this series. Please make sure to comment and, of course, like and subscribe.